Good morning, everybody. Oh, thank you for the support, especially for starting the stream. Awesome. Thank you. Appreciate that. Let me go ahead and get the stream shared out really quick. Just 1 second and we'll go over the market, everybody. I just have to share the stream out really quick. Okay. All right. Good morning. Good morning. Let's see what we got going on. So we do have some selling, and we will check the HIG and the VVIX on open. HIG's not going to be super updating right now. They usually never do a lot of their buys and sells in the open. But structurally, um, you know what? Let's ignore those for a moment. So what we are kind of contending with today is that the daily 20 mile, and this is on semiconductors, so I'm going to go over SPY in a second, but it's all going to play hand in hand. So semiconductors have been moving, anywhere from -$5 to -$30 within a single session. Our 20 mod level is currently at the 480, which means that the lower bounds of that level is usually going to be around $2 below that, so about 478. Now, the 20 mod will be pulling up very slightly, so let's consider the 20 mod around 482. That means the lower bounds will be around 480, the upper bounds around 484. That means with the current price being at 486.25, that we're only $2 above that testing range. Okay. And not only are we $2 above, but we're building bearish structure to push downward while being $2 above. So that's telling us very, very likely we're going to be having quite a red day. Okay. Now, does that mean we're going to be going below 480 today? I'm not sure. That could be very, very large potential. Um, Even though the market is down quite a bit right now, today might be one of those extremely, extremely rare red days. With QQQ here, and that was yesterday's trade, which I was actually able to exit very well. But with today's trade on QQQ, you have this inverse cup closing. Okay, that's not fully closed yet, but it's getting close. Okay, getting very, very close to closing that level. Bottom of that level is at the 698.86, so roughly $1 away. From that, we should be expecting a little bit of bullish liquidity and then continuing to pull downward. So QQQ is also telling us that we have plenty of room downward today. Now QQQ's 20 MA still, quite a ways away from where we're at, so that's why I'm expecting semiconductors to head much further than their 20 MA. Because for QQQ, the 20 mile is going to open today around the 685. So that gives the upper bounds of the 20 mile being around 687, lower bounds around 683. Current price is at 699. Um, I'm not seeing a, basically $13 downside day today on QQQ. Very likely that's going to be happening over the next, you know, 3, 4, 5 sessions. Rather than semiconductors, doing all that in just a few sessions. Now, with semiconductors, with how hard they are pushing down, that does open the weekly 20 mall, which is currently at 383.99. That will be pulling up to that 400 range, which coincides very, very well with our daily lower Bollinger. Okay, lower Bollinger is at the 408. So by the time we get the SPY 20 mile retest, the QQQ 20 mile retest, we might be seeing semiconductors at the bottom of the lower Bollinger. Just something for us to, you know, keep track of. For SPY, this level will be around the 726, 727 today for the 20 mile, which means that the upper bounds will be around that 729. Um, SPY currently isn't that far away from it. That's a $5 downside just to hit the upper bounds. Um, $7 downside to hit the full 20 mall. So, um, that potentially can happen today. Um, but again, that's not something I really anticipate to happen. Um, that's quite a large move. And some of the levels I'm looking at, it's like for today, for example, um, we have this very large inverse up and handle forming, which is also forming the liquidity for a larger head and shoulders. Pretty much already formed that liquidity. So this next level we need to hit is the 731.89. So roughly a $3 downside. From that downside, we should see a small pop upward to create again an additional uh, inverse cup to fully break that level. So I'm not really expecting the daily 20 mod today. Um, but that's definitely within the cards if they go ahead and aim to break this level and really start pushing downward. So we'll take it level by level. But so far, I'm not expecting that crazy of selling. Um, or some really, really good contracts here. We are looking at SOXS. Okay. The current price in the pre-market is 1052. I'm expecting this to, again, see a little bit of a pull upward, then pull downward. Even on SOXS here, even though I usually don't focus on charting the leverage ETFs, this cup has formed. We should expect a slight pull down into a handle. What I'm really wanting is people who haven't taken puts yet, really, um, to be taking the SOXS calls. Now, excuse me, sorry if my throat cuts out today. I'm not exactly feeling very well. My wife has the flu right now, so I'm slowly starting to get it, and that's not fun. But besides that, we should be expecting this cup and handle. This handle will break us above the $11 range. So if you're looking for some really nice contracts that, you know, the entire market's telling us are going to print, um, the 1050 calls and the 11 calls, get those for about May 12th. So I'm going to make a note here really quick. And I will just clean this up 1 second because I don't want this. We'll drag that over the side. Good morning, everybody. Sorry I'm not having a chance to look at chat too much yet. Always a lot to go over in the pre-market. Okay, so that's for success. And again, that's basically taking a semiconductor put. So, um, semiconductors in the pre-market are starting to break that level that we talked about. So, with that, seeing how we're only 5 minutes away from open, that is giving a little bit of call opportunity here, which I know can seem a little sketchy on a day like today. Excuse me, but with the 5 minute lower Bollinger being pushed, that definitely gives us the opportunity for calls. Pig, I'm looking for this move down to the 79.24. Um, don't really have much to say about that until the market opens and we start seeing some of the price action. VVIX has been pulling down very aggressively. I don't really have a good reason why for this yet, um, but I will figure it out. This has to do a lot with dealer positioning, though. How dealers are basically taking money and moving into different sectors rather than just slamming puts into the tech market. Um, this could be a major bearish signal, even though it looks very bullish. Um, this could be saying that there is a massive, massive, massive rotation going on, which would mean that eventually the tech puts are going to start being written pretty heavily. So we're gonna keep our eyes on the VVIX. I do expect it to pop upward pretty aggressively over the next few sessions. Yesterday we saw the RSP, which is the equal weight, um, hold pretty well, and many are looking at this cup and handle forming. I'm expecting this to invalidate. The RSP has been gaining a lot of weight from different sectors, and again, the equal weight is going to gain if a lot of tech sectors or a lot of these very heavy sectors are moving into lighter sectors. Um, so that's something just to be very aware of. Now, on SPY here, I really, really, really do not want to take a call until we push the bottom of that level. Okay, and that's the, oh, I had the Bollingers for a second. That is the 733.39. Okay, but from that range, it should be a very, very nice call opportunity. And with that, we would be targeting the 20 mile. So if we get a push downward pretty early here, then what we can kind of expect is push hit that level, start building some bullish liquidity of some sort, then head up towards that 20 mile. So that'll be very solid trade, assuming we get the conditions we need for it. But that's what I'll be looking for. Um, and from that, we will be looking for the short positions heading further downward. So again, this would be kind of where you take like those success calls, the TQQQ puts, the SPY puts, things like that. All right, just give me 1 second and I'll take a look at chat. Also need to get this shared in the Discord. I forgot to do that. Okay, so we got a minute until open. We are pushing down, so I do kind of want to watch list some of these calls. Share the stream really quick. Now, the calls that I want will be at this 20 mile range. So when we get to the very bottom here, I will be looking at these 735 calls. So those are the ones we need to quickly get added to a watch list here. And from those 735 calls, we would be targeting the low of the day. So we can also add the 731 puts. Now, we're not taking the 731 puts yet, obviously, but we're just adding them to a watch list to take them later. Okay, so let's see our VVIX here. VVIX is at 91.18. This will update in a few minutes. Um, and the HIG pushing down very, very aggressively. So again, we're looking for, I don't know what liquidity range that's targeting, but we're going to change it. We're targeting this 79.24. Okay. Um, Take selling off is a massive deal. Now again, I'm looking for that lower Bollinger move before I enter any calls. And I'm just keeping an eye on the VVIX. So it did tick upward to 93.08, so a very large move upward. We should be getting our level here, which again is going to be around that 733.36. And that'll be a very, very quality opportunity for adding some calls to the upside. All right, let me go ahead and look at chat. Sorry, everybody. I'll check out Google in a little bit after we get our entry on these calls. Good morning, everybody. Glad you're here. Now for the TQQ, so let me step back. For the larger puts, we're looking for the daily 20 ma. Okay. Um, that's still a whole, $7, $8 below us currently. So we're not wanting to exit those quite yet. Okay. Because pretty much everybody's major puts that we've been targeting should be out until at least May 29th or like June 5th. Those are some of the days we've been focused on. Yeah, when we get to the bottom of this range, that's when I'm gonna take a SPY call. Yes. VVIX still ticking upward, so 93.24. And we're just watching the SPY very closely right now because we're looking for our specific entry on those SPY calls. And I want to take a look at semiconductors and everything too, because I know semiconductors hit that gap, so huge candle. Went from 483 to 492. That's crazy. I don't think there was any news, but let's go ahead and take a look. Let's see. No, I'm not seeing any news off of this, so that's likely a short candle for liquidity, so we should be heading downward. Yeah, so we're still going to look for the calls once we hit this gap at the bottom. And from the bottom of that gap, we will ride those calls up to glory. So, okay, so we're still targeting again this 733, roughly 36 range. Good morning, everybody. No, we're not adding the SOX calls yet. Um, yes, there's room to the downside, but you want to let this gap get hit first. Okay. From that gap, we're going to be taking upside calls. So remember, success calls are basically semiconductor puts. Um, we want to be very patient on taking those. Now, there's a little bit of a call entry here, but again, I'm going to be very patient for the bottom of this gap because this is just kind of screaming to me that dealers want that. Um, so I don't expect these calls to push upward too far yet until we fully grab that gap. Now, I do want to look at semiconductors, so give me a second. I'm trying to look at them on my phone while having the stream. So semiconductors are pushing out pretty hard right now. But I'm not seeing any news coming out. Yeah, the put trade's going to be a lot better, because again, I see a lot further downside. But do need to figure out what's going on with semiconductors right now because we have hit that 483 and bounced, you know, quite a bit. Um, in fact, I'm actually going to short semis right now. So I'm going to be entering into quite a bit of those success calls. And for these calls, since we have been pushing downward, I am going to target the 10 strikes for May 29th. Okay, I was able to get my calls filled at the 101. So yeah, semiconductors heavily pushed up. Um, that means that we have a ton of downside today on our short target here. Um, because again, we target the 20 mile on the 5 minute time frame. 20 mile here on 5 minute time frame is at the 487. So that's telling us currently we have about $10 of downside. Was originally 13 if you time the top perfectly with us. Now, I also want to add some of these 11 calls while we're still up in this range, because I do think there is a lot of profit to be had in those. Okay, and I am all set. So they worked a little differently. We did push upward first, but even on SPY here, I'm still looking for our downside gap before we take any contracts. Um, Yes, there was a little bit of a call opportunity there, but I really dislike that call. Um, there's no news or anything with these candles. Excuse me, I can't talk today. There's no news with these candles on semiconductors that I'm seeing anyway. So this is telling me very likely that this is a very, very large short candle. Um, preparing to really head for some real blood on the day. Now VVIX was up at the 93.30. It's currently at the 92.50, or excuse me, the 92.91. So that has been pushing back upward again. Now we're still looking for this downward push on SPY. So the 733, roughly 36, and that will be a call opportunity. Check semiconductors here. Now on these SOX's calls that we took, I'm not going to be exiting those at the 20 watt today on semiconductors. Um, Again, we're going to be holding these for the daily 20 mAh, which is much further downward. So I'm expecting a lot of this buying weight that semiconductors saw um, to be sold off, almost entirely all of it. So now for SPY, I'll check the 1 minute time frame. So there's an inverse cup on the 1 minute time frame. That's telling us we will head down to that gap. So we should get our call entry very, very soon here. Now, if you bought those stocks as 10 calls, they are technically already in the money. Mine are currently up about 17% right now, which is awesome because we have a absolute boatload of downside on semiconductors. So GVIX still pulling upwards, so 93.08. So again, very, very likely that major candle within semiconductors was a short candle. Um, so we should see the full downside closed. Sorry, I have not been able to look at chat a lot. It's gonna be difficult until I get my computer set up, which I got my desk. I just haven't put it together yet because it's a big bulky thing. Um, I need some help with it. But once I get that completely set up, I'll have my actual desktop set up and I'll be able to monitor a lot more very easily. So no, we're gonna keep those open just in case of a crazy blowout out of NVIDIA. At this point, those are basically insurance type positions, so that if we get some absurd upside, um, that your portfolio won't be blown away. Okay, our level's coming up very soon here. So again, we're looking for the 733.36 to take those calls. We might push downward slightly further as we do need to build some bearish or some bullish structure at the bottom. But 736, that's where I'm taking my calls. Should be hitting literally any second now. And again, we're just taking these up to the 20 mAh. 20 more cents, let's go. Just be super, super patient for this level. It should hit. And our VVX is steadily rising, so 93.54. Just be patient on these calls because again, from this inverse cup, we're expecting a little bit of a pull upward and then push downward. So just be super patient. We should get our level. Now again, these are going to be the 7:35 calls when we take them. So get ready. Let's look at this. Okay, and we're going to go ahead and enter now. So I got my calls at 136 per. Again, expect a little bit of a push down, but this should take us all the way to the 20 mile here. So we're going to mark our entry. And again, we are looking for the 5-minute 20 mile. So that is currently at 7:34.43. Excuse me, I'm looking at the 1-minute time frame. It's at 7:35.35. Okay, so our upside is quite large right now. And with today's selling, we will be exiting basically right underneath the 20 mile. So with the 20 mile being at the 7:35.39, I kind of want us exiting those calls around the 7:35.27. Okay. Now semiconductors still pulling down, so that's still just telling me that was a massive short candle. Now we're just waiting for our exit on these calls, and no, we're not going to be greedy. So again, make sure you exit about 80% of the position at that 20 mile range. Those Soxus 10 calls that I took are up almost 20% already. We're gonna discuss entering puts at the 20 mile today when we actually get up there. So set a conditional order. That's what I do. I set a conditional market order. Not every brokerage has that, but what I do is I set the order slightly below that 20 mile range. So currently the 20 mile is at the 735.43. That means you should be exiting, basically at that 735.31, 735.27-ish range. Okay. I have mine set to the 735.31 currently. So I will just happily let them take those calls at that level. Oh, that's fine. I mean, here's the thing, right? It's all about profit. We're not holding these for some crazy glory. We hold our runners, so that's why we exit about 80% of the position. Um, if you have running contracts, then you allow those to run if we're going to, head up to the upper Bollinger, whatever it might be. But securing majority of your profit at that 20 mile is how you're going to stay consistent and, make your money. Because sometimes the runners aren't going to run. Sometimes the runners are actually going to pull down on you and you're not going to profit as much as you did compared to that 20 mile exit. Yep, still fully expecting our 20 mile level here. Now, VVIX, let's see, it's at the 93.20, so it has pulled down very, very slightly. Still very elevated though, but it should be giving us our level basically. Awesome, great work everybody. No, no, you don't ever FOMO into a position. So again, we enter only on very, very, very pristine entries. We only exit when our exit is presented to us. Okay. Um, when I trade, I literally try to make it so it's 100% emotionless. Um, you know, there's actually a set of rules which I'm going to be printing out, or sending a printout to the Discord where you can actually print it out and everything, um, of how to day trade on the 5 minute time frame very accurately. But with that said, we have very, very strict rules of where we exit, where we enter, um, 0 vibe trading here. Okay. Um, we do that for a reason. We do that for consistency. They're going to grab my call here any second now. But we do that for consistency. And yes, you will get big wins with this method, but it's not the, YOLO gambling method where you buy 100 calls to the upside and hope they run. Um, that's not what we do here. We focus on very, very, very strict guidelines for our entries and exits. And from that, you'll retain consistency. And on the contracts that end up getting chopped up during the day, you usually will be able to exit for basically a zero profit, meaning a zero loss as well, which is super, super, super ideal. Oh, thank you. My wife brought me coffee. Okay, so just waiting for this call to get taken from me. I might just move my order down in a second here. I'm gonna move it down to 378.27. Okay, they got it for 213. Awesome, awesome. You know, super easy $70 profit, basically 70, 80, whatever it was, in the span of 5 minutes, something like that. So this is why we focus on very, very pristine entries. Now, in terms of taking puts here, we're going to be patient because a cup has formed, and from that cup, we are expecting bearish structure at the top here. Okay. Um, but I want to see if they're working on that smaller cup or if they're trying to aim for a larger, uh, bullish structure. If they're aiming for just that smaller cup, then they will pull down the price to form a handle here fairly soon. If they're aiming for the larger cup, however, then I do want to try to get a short within the upper Bollinger. Okay, I mean, ideally that's what we want to target on the day. The upper Bollinger will have to pull down slightly. So it does look like they're building the top of this cup, which again, expecting bearish structure. So you can short into this. You just have to be very careful because the short entry doesn't give you a lot of room. Technically on the 1 minute time frame, they can pull this down to the 1 minute 20 mo, which is only, $1.30 to the downside currently. Still a very nice contract. But $1.30 down, hit that 20 mo and then potentially bounce. But if it's going to be, a really, really pristine entry today, then that 20 mile rejection will pull us down all the way. Now, again, we are looking for a handle on this larger inverse cup that did close to our range that we were expecting, which means that a very, very small put entry here is going to be ideal. Okay. And we're going to target the, again, 731 puts. Don't go crazy on this put entry. Okay. This is not the best put entry. We're waiting for the upper Bollinger, but this is still a very potential possible good put entry, so we're going to take it. Only reason why we're going to do that today. Okay. We're targeting this 731. And again, with this contract, um, not being at the upper Bollinger, it can get chopped up. So just be aware of that. Okay. With us not taking this upper Bollinger entry, the contract absolutely can get chopped up. So I'm going to go ahead and just very, very, very lightly enter. Sorry if it sounds like I'm shivering, that's because I am. So the puts right now are very cheap. So I'm entering at 0.56 per. Um, I'm only grabbing 4 of these currently. If you have a small portfolio, I'd literally only grab like 1. Um, because the potential is that they push us upward or chop this out and pull the upper Bollinger downward to where that becomes a very, very quality put entry. So while we did have a very small put entry here, um, I'm not expecting those to go super, super well until we really get the primed entry at the very top. So I do expect those contracts to see a little bit of chop. I'm focusing on the 731s. The reason why is because that's where that next big liquidity gap is at. Um, and potentially we're going to be heading down much further today. Just based off of everything I'm seeing, it looks like today's going to be a very, very, very deep selling day. Um, they're having these very large candle pushes to the upside, very, very likely to knock bears out of positions. Okay, that's why you do that, is to quickly unposition bears. Well, why would you do that? That's so that you can take their puts. Um, you know, or sell quick high V calls into, people trying to FOMO that trade. But um, a lot of dealer shaking currently, which is telling me that we're going to be seeing quite a bit of downside from our upside, which I'm going to mark this. We entered that literally pristine. So 2 pristine entries today. Um, one on semiconductors, one on SPY. Very happy about that. But we are holding these success calls for basically the daily 20 mile. Um, that's at the 483 currently, so we have a lot of downside still to go. And that should reflect within the SPY as well. Um, you know, for us hitting that 731 range. We haven't been holding the daily 5 mile range though. Yesterday was actually a rejection of it again, and that makes the second rejection in a row. Um, that's a very, very bearish signal. Now the VVIX is at the 92.59. Pulled downward slightly, but that really correlates with that upward movement we were expecting. Um, I'm pretty much expecting the VVIX to pull up to like 96 something today, basically around there today. Um, Today is a very, very large selling day, or it's positioning to be that way. Now the HIG, let's check the HIG because they will be continuing to sell the HIG. Lots of share sales going on, but we are looking for that gap at the 97.24. So we will keep our eye on that. Just want to look at NVIDIA here. Yeah, NVIDIA is doing terrible right now. Okay. Now again, thing about these puts, this can be a cup and handle, so we have to be careful for that upside, but none of the signals are telling me that we're going to be seeing upside from this. Very likely this is going to work to invalidate, um, this previous cup structure, especially when we're seeing the VVIX continuing to push upward. Um, Semiconductors have just been absolutely dumping since we bought the top. I should say short at the top. And what else do we got going on here? So now we're just waiting for our downside. I want to show our put entry because if it was a pristine put entry, then that would have made the third very, very quality entry of today. I'm still adding to the GDXY. This is something we're going to continue buying into. Um, with drip, I do want to wait a little bit, even though it's at a very quality range to buy. Um, I do want to wait for some of the conflict within Iran to cease a little more, because there were going to be some planned strikes as of today, but they were postponed or canceled. No, the success puts, you're basically holding those as a hedge position. Okay, so a hedge is insurance. The insurance is that NVIDIA has earnings tomorrow after or in the after hours. Um, if NVIDIA has a super, super good earnings, which usually NVIDIA does, um, we can see somewhat of a rally from that. So that's why you're holding those calls or those 9 puts on success still. Even if it seems very far out of the money, it's still something you want to be holding. It's insurance for all of our downside. And that's something I will be teaching later on too, is how to properly hedge. Um, it is a little more difficult when I just have the laptop and the phone. When I get my ECL set up, I'll make it much easier to be able to go over, you know, which positions we should be hedging and how to hedge them and blah, 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 blah. A bit of a bounce here, but I'm not concerned on the 1 minute time frame, which I usually don't like the 1 minute time frame, but I am looking at it today very closely for some of this bearish structure. We do have this head and shoulders building, which is looking very nice so far. Um, if that right shoulder completes, gives us our rejection, it will invalidate that entire bullish cup, which will tell us that we're going straight, we're going to be going to that 731.89. So that's what we're looking for currently. now VVIX pulling down very slightly, but again, it's still extremely elevated on the day. Um, and I'm still fully expecting this to absolutely soar today. We're seeing semiconductors still continuing to shed weight, and they're actually within the 20-mile range currently, which is kind of giving me the conviction saying that very likely they're going to aim for that downside to the daily lower Bollinger rather than just the 20-mile. Um, the reason why is because the SPY's not even at the 20-mile yet. And we also have QQQ not at the 20-mile. These both are desperately in need of retesting that level. So it's very likely we're going to see semiconductors really, really, really lose some weight here um, over the next few sessions, assuming, NVIDIA doesn't save it. But if we have our down day tomorrow throughout the market, QQQ and SPY should hit their 20-mile range. So that would give us that range to exit some of those puts, hedge against them with some calls, and be prepared for the next move back up to all-time highs or, to continue pushing further downward. SPY slowly giving us our level now, and it is working to invalidate the cup, which means that this entry here would have been very, very perfect. So I'm going to delete the upper Bollinger because we nailed that entry. So we have both calls and puts on Success right now. Um, so I want you to think about this when we're trading and think about a scale. Okay. If you have your scale and the scale can hold either, upside or downside. Okay. One side will be holding upside, one side will be holding downside. If you buy a single Success call, okay, that's basically saying a semiconductor put, you're putting that entire weight 100% on the downside. Well, what happens if we have any upside? Then that downside is going to get absolutely cooked. Okay. The goal is to put a little bit of weight into the opposite side as well, so that if the market behaves irrationally, because that's what markets tend to do, um, that you will be able to catch some of that weight that's lost. Okay. That's the whole goal of a hedged position is basically insurance. Great job on that put exit. I'm still going to be holding mine for the 731.89 because that's just what dealers are telling me they want right now. Um, yeah, everybody should be having a absolutely fantastic day right now. We've nailed three very, very, very quality trades so far. Um, again, none of these have really been vibe trades. These have all been very, very structured. We nailed the top on semiconductors, almost a full $20 downside. Okay, so everybody's everybody's semiconductor calls or semiconductor puts should be absolutely blasting right now. Yeah, my 10 calls are up 51%, which we took that, less than 20 minutes ago. Super awesome being up on those contracts like that. Yeah, we have a lot of downside today, so really just let this downside do its work. That's why I'm not going to rush out of any of my put positions. I'm just going to allow the levels to, do what they need to do. Now, we do have this inverse cup formed here from the bottom of this cup. again, we should be expecting a little bit of upside before further downside. Um, Technically, you can take calls into this. I'm not going to. Um, our VVIX is just continuing to push upward. It's currently at 93.71, so heading towards that 94 range. It'll be our exit is basically going to be right at that 731. We'll mark it for 731.91. Okay, so it's slightly above the gap. That way we ensure we lock in profit. Good morning, Wonders. Yay, Anna, that makes me so happy. I know you need a big win right now, so that makes me very happy. Now, my 9 calls on Success from last week are up 180%, which is really awesome. Let's see what my SPY put is. When we were at the top the other day, I bought a few of the 726 SPY puts for June 5th. Um, so far they're up 27%. I'm super, super stoked about that. Yeah, great job, everybody. Great job. And again, you know, not trying to sound like a broken drum or whatever, but like if you trade really structured, and that's exactly what we attempt to do here each and every day. If you trade really structured, you're going to find these wins almost each and every day. Yesterday was a little tougher day, where we tried to take those calls to the upside, but almost as immediately as I had to leave stream, we got that push upward, which I was able to exit my calls for basically very, very low loss. I think I only lost like $8 on all of my calls, that I had, and that could have potentially been hundreds of dollars of losses. So with my trades, I try to focus on minimal loss as possible. Okay. Because from minimal losses with very, very well-timed entries, you're going to be able to start finding very, very strong consistency within your trades. So again, that's what we look for here. Um, that's why we're very, very patient on when we exit or enter anything. My TQQQ puts, so let's see, I have the 74 puts, which they're up 78% right now. And then I did grab some of the 70 puts either yesterday or Friday, and those are up 30%. You see, breaking even on those calls, that's perfectly fine. Um, again, most options traders cannot even pull a dollar on the day. Okay, like over a 30-day period, if you're to look at 99% of option traders' accounts, um, there will be a lot of days where you see red. Okay, um, most traders cannot pull red contracts into zero, basically. Um, that's something we work on very, very hard here, is where if we have positions going against us, we work extremely hard to get those positions back to a neutral stance, where basically we're having a very, very, very minimal loss on the day. Um, that's something I focus on very, very, very much so. Um, because again, minimal losses will create a lot of opportunities for major upside. Thank you. I appreciate the $2. Yeah, I mean taking a very minimal loss is a win. Um, it you're buying for the opportunity, right? So it's like, for example, if you took calls here at the Lower Bollinger, you're buying for that opportunity to head back up to the 20 mile. Okay. If it goes bad, well, ideally you don't want to lose money. Even if you can't make money, even if you can't profit off of this call, you still want to be able to turn it into not a loss. Okay. Doing that becomes a win at that point. So we play for the opportunities that the market provides us, but it's not always going to work out. Um, and when it doesn't work out, we need to know how to navigate things to a way where we can minimize our losses very, very greatly. That's so awesome. Great job, everybody. Yeah, everybody should be kicking butt right now. I know I am. And if I am right now, I know you guys are, so. And again, I'm exiting my puts at the 739, or excuse me, the 731.91. Okay. And these are only the 0 DT puts I'm exiting. Let me be very clear about that. Okay. Our dated puts, we will be holding still. Now, if you want to take some profit on some of these dated puts, you can, but wait until we get to that range. Okay. Don't do it early. Try to absorb literally every single dollar of profit that you can out of it. So for example, currently I have 44 of these SOX 9 calls. Okay. Um, my average is $78 per. They're currently about $230 per. Um, I'm gonna exit probably like 12 of those once we get to this level, secure some profits, and from that level, I actually want to take some dated SOX puts against my additional puts. Okay. So that's how I'm going to be doing that. But that way, if we start getting upside, because again, we're in a very irrational market. Okay, so if we start getting upside, those SOX puts, those are again basically the same as semiconductor calls, will cover a majority of that upside. Okay, so try to think about that in terms of navigating longer positions rather than just fully taking profit just because they're up. Um, Even though I know it's very lucrative to do so, uh, I know these are very big wins for you guys. So, um, definitely lock in profits. That's the entire goal. But if there's running room on some of these contracts, let's try to secure that. Thank you for the $10. I appreciate it. What's our success target? So our success target is, hold on, let me make sure I'm watching SPY here because we do have a put exit coming up very soon. So for success, what we're looking for at this point, seeing how we're doing a 20 mod test, um, I'm looking for this lower Bollinger. Okay. Uh, I think that SPY and QQQ still having the room between where it's currently trading and the 20 mod is telling us that that semiconductors can be sinking quite a bit here. Okay, and we really just want to soak up every little penny we can from that. I appreciate all the support and everything this morning, everybody. Um, I'm glad everybody's having a great day. Uh, Usually this is how a lot of our streams are. Um, Yesterday was just a tougher day, and we missed our exit by like 7 cents. So I was upset about that. You're very welcome. Very, very welcome. Again, I'm gonna sound like a broken clock, but our entire goal here as a group um is to, of course, have successful trades and bring success to our lives and everything. But my goal is to teach how to have very, very precise entries and exits, okay, and how to be able to follow trends, how to be able to follow the market in ways that, you know, really 99% of people don't know how to do. Um, I was very, very ill for roughly 2 years, which made trading and teaching very difficult for me. Now, our exit, okay, we got our put exit. So again, I'm going to be exiting just a few of my Success puts or Success calls here. Literally just a few. Now, from this level, we are going to buy a few of these Success 11 puts for next week. Okay. These are entirely a hedged position. Okay, meaning that this is insurance. This is just in case we head to the upside. And I got those 11 puts for May 29th. Or, hold on, or 115 per. Okay. So this is a upside hedge. This is basically locking in profit. This is uh just hedging positions in case the market flips on us. And for our 0 DT puts, everybody should have absolutely killed it today. So very proud of everybody. I'm trying to change an order really quick. There we go. And I actually want to hedge a TQQQ call. So hold on. TQQQ is at 71. Let's check for my 74 put is for June 5th, so I need to hedge a call for June 5th. Um, I want to hedge the 77 strike call. It's cheap, and again, this is literally just insurance. You don't buy insurance to go crash your car, you buy insurance in case your car crashes. So, just putting that out there. Um, we're never going to be 100% right about the market, and you want some insurance just in case that does happen. So I bought some of those 77 TQQQ calls for June 5th um, at 185 per. Okay, and again, that's just an upside hedge. Now, something I didn't discuss, which I guess I should have because I got caught up in all the hype, is that this is the bottom of a very, very large inverse cup. Okay. What does that mean? Is that just like the top of a bullish cup, the bottom of a bearish cup, we expect bullish structure. Okay. So we're going to write that. But this means that potentially there could be a very, very quality call upside here before we fully head downward. I'm going to change that text to white so that I can actually see it. So there's that. Thank you for signing up. I appreciate it, everybody. We're looking at spy calls. Now, these calls, I want the 734. I want the 734 calls riding up into this. And again, this is literally just to create a handle to the upside to continue pushing downward. Okay. So we're looking for bullish structure here to start forming at the bottom of this major cup. This isn't exactly bullish structure yet, um, but it can be. And within our 5 minute time frame, we did get our lower Bollinger push, which means that we can start seeing that upside to or toward the 20 mile. We'll set our exit on these calls at the 734.37. Okay. So that's going to give you roughly a whole $2 upside on those calls, which is absolutely great. So that should be another very quality trade. We're going to mark this entry. And these are the 734 calls. Now I want to take a look at the VVIX and HIG. So VVIX still pushing up. Remember how I said that 96 range today? Almost there. We're really, really nailing it today. Um, so 95.46, it is super, super elevated. If this continues upward, we're going all the way to like the 98 plus today, um, which is something I was really expecting out of yesterday. Calls starting to take weight. I want to delete some of these drawings here now that we did, but calls starting to take weight. We are using the 20 mile as the exit again, so this will be what the fourth fourth trade today, something like that. Very nice trading session though. It's really good when they do give us quality entries and actually give us good exits on them. Market does not always like to do that, so yeah, have a great day everybody. Um Now remember tomorrow morning I won't be streaming. I will be streaming Thursday and Friday though. So I do look forward to seeing you all on Thursday. No, I'm not ending the stream yet, don't worry. But just for those that are getting ready to head out. Um we've had some super good trades today and I wouldn't suggest trying to overtrade. Um but there's another few good trades here today. There is this upside which is going to be a bearish upside. Okay, I know that may not make a lot of sense, but this is done for bearish liquidity within that handle, and then looking for further downside. And from that further downside, we will be targeting this next gap. Okay, which this next gap, there was one at the 727 somewhere. I'll have to find it again, but it's at that 727. So that's what we're looking for. Yeah, you are all very, very welcome. I'm very happy that everybody's having a great day. Exactly what I like to hear. You know, market's very hard, and I know I say this all the time, but market's very hard, but it should be something that should be a feel good thing. I know the market for a lot of people is kind of like a stress, a worry, oh, am I going to lose a lot of money today type thing. That's not the goal. The goal is that this is kind of like a river of money that we're able to go stick our bucket in and pull it out. Um, if we're, doing it the proper way, not just drowning in the river type sentiment. Yeah, you're very welcome, and thanks everybody for all the kind comments and everything. I appreciate a lot. I've been going through a lot over the last 2 years, so being able to stream again and everything has been, really, really great for me. See, and currently these 11 puts that we bought as a hedge are up. Um, no, I'm not expecting them to really take profit or anything, but currently we are exited out of that 11 range. Because we are expecting those upside handles to those larger cups or those larger inverse cups, but it's kind of a reason why we take those upside hedges because we want to offset the burn within the portfolios and, assume we do get some crazy good news again. They this pushes back up to that 500 again, which it did that all within, less than 10 minutes. So if you think that can't happen again, it absolutely can. Um, we'd be able to profit immensely off those puts in that situation. So, um, yeah, just kind of how I'm thinking about that. Now, the HIG still continuing downward, but it is looking to hit that gap that we're looking for at the 79.24. So that is perfect, but that is also kind of alluding to potentially pulling up, creating a handle, and then heading downward further. Okay, so HIG is getting very close to that range as well. We're seeing a very slight pull downward within the VVIX, which is giving us a little bit of, credence that we can be seeing this 20 mile exit, we can be seeing this upside. Now, as the 20 mile moves lower, you need to be setting your conditional market order lower, kind of like yesterday, but just make sure it's about a whole 15 cents underneath that level, just because you really want to make sure your exit catches. Yesterday we made the mistake of missing our exit by literally 7 cents, and some people actually had their stop loss set literally to the penny, and those orders did not get filled. So I think from now on we're just going to evade that entirely. We're just going to set it about 15 cents lower than the actual 20 mile and allow the 80% position to be cut out, let the runners run. So you're definitely welcome, Anna. Very happy to see you having a good day. So now we're just going to be basically chopping. And this chop is going to be a lot of this upside chop, I believe, to create this handle to the upside while also pulling the 20 mod downward. So the expectations are still the same. It's just going to be a little choppy. So yeah, now that we are chopping, if anyone has any questions about anything or any symbols they want to go over, whatnot, now is a super good time. Sorry, I'm just looking at my phone for a second. Can we go over Micron? Absolutely. And are you looking from a daily perspective? Yeah, we'll just go over the whole thing. So I was talking to Anna about this last night, but what I'm really expecting, just some notes we have, old liquidity level, old target range. So with the daily time frame, you're literally just targeting the 20 MA. Now for Micron, do I expect Micron to really push further than that 20 MA? Not entirely. It's actually a range where I'm I'm I can't suggest, but for a lot of the Micron holders, um, this might be a really opportune buying opportunity um, when we do get to that 20 mile range. Because remember, Micron and all these semiconductors are still super, super good companies. Um, Nothing's really changed about that. The only thing that's really changed is that, we are in a conflict with Iran, and a lot of that volatility is hitting the overall markets, both in a negative and positive aspect. It can be pushing the market upward as well as pushing the market downward. So, with that said, um, sorry, I'm looking at my positions for a second. Um, with that said, we should overall be seeing further downside, but um, Micron overall should be gaining weight throughout the overall end of this. Even if you see it push down slightly lower, um, I'm really looking at that 20 mile range before having a pretty big bounce. And one thing that you can do as well, if you are a holder, is that you can take a put and all you have to do is target the lower Bollinger. Okay. So let's look at Micron for a second. And I can't really pull this up on laptop because I don't know how to navigate the options on the laptop at all. Um, I'm looking on my phone, Micron, Micron, Micron. So let's look at the lower Bollinger, okay? And let's look at, let's say July 17th. So to hedge the downside of Micron almost entirely, um, let's see, lower Bollinger's at the 399. So that's going to cost about $700. Okay, so for the price of almost a single share, you can hedge 100 shares. Okay, and that's a massive hedge. Okay, that will entirely pay out any downside you're going to see within this symbol. Okay, um, and that gives you a whole 60 days, and that catches the lower Bollinger. Okay, um, but while you do that, this 20 mile range is still a quality buying opportunity. So setting up both, I know it can be a little expensive, but setting up both is, very, very ideal. Um, because either we're going to push to that lower Bollinger and you know, that's going to be that, or we're going to have a major bounce. And because this contract has so much time to it and it's so far out of the money, it's going to be holding a lot of its weight. So even if we do have that upside bounce, say we bounce up to like 700 something, that $700 um put uh the put hedge would probably be around 620 at that point, something like that. So, you're going to make your profit one way or another. I'm not expecting the market to really head upward until we see uh basically SPY and QQQ also test their 20 mile ranges. Um, they're both very due for it, and if they don't test it, then that's going to heavily overextend the market in ways that I haven't seen in a very, very, very long time. Um, I can't even really name something that wasn't, like a meme stock or something that's done that type of price action, especially for like a main index. This 20 mile range should be exactly what we're gravitating towards. And we could see that over the daily time frame, We have rejections at the upper Bollinger. From those rejections, we're starting to heavily pull downward. Um, so I'm looking for those moves downward before I really start targeting semiconductor upside too much. Um, there's the possibility that semiconductors test this level and bounce and take the SPY and QQQ with it, but I'm not really anticipating that. I'm really expecting this to kind of push down to that lower Bollinger while we see SPY and QQQ take their 20 mile levels. So again, we're still looking for our call exit here, and we do have to continue pulling the price down on the conditional order. So I'm going to set mine to 733.97. Okay. Just because er, I I'm not married to those calls. I don't care about them too much. I just want to make profit. So we'll secure profit on that, and we'll wait for the next major put entry. Now, is that for Micron? I think that could be expensive. Um, and because I know who you are and your age and everything, and I'm not going to discuss that, but I going to heavily disagree with that in your situation. Okay. Um, I think that you should be still focusing on some of the cheaper contracts. So if you want to do that, take a Success call. Okay. Take a couple of these 11 Success calls. Okay. Because that's basically a semiconductor put. That's going to catch if we get our 20 mile, 20 mile throughout the SPY and everything else. So do it that way other than going through Micron. Even though I know it's very alluring and there's a lot of money to be made. Um, I would heavily prefer for at least a few months, you know, maybe even a couple years that you're staying with these cheaper contracts right now. Okay. Um, and I don't mean that in a dismissive way or anything else, but let me tell you, a lot of us have been through a lot of depression, downside, just really bad moments in our life to be able to learn how to trade like this. It doesn't take a lot of work to be able to blow your account up. Um, and that I don't want that for you. Okay. I want you to really focus on the growth. You're young, so focus on the cheap contracts. Focus on stuff that if it doesn't go your way, it's not the end of the world. Okay. So for SOX S, whenever we talk about SOX S, those are semiconductor puts. Okay. So that's like taking a put on the actual SOX. They're terrible names because it's like SOX and then SOXL. Um, but it's SOX S. It's the bear ETF. So buying a call to the upside is taking a semiconductor put. And again, I would try to target for about the May 29th. Yeah, we don't want anybody blowing up accounts anymore. That's something I'm working extremely hard to prevent people from doing anymore. Um, yeah, and especially as a younger trader, I really don't want that for you. It's a really hard lesson in life to go through that. So, um, if we could prevent that, we're going to prevent that. You're very welcome. You're very welcome. I mean, I've been in that exact situation. Okay, there was a couple times where there was pretty much the market was primed for the move for the upside. Um, and so I bought some really, really, really expensive specs calls that were, basically 1DT. The calls were, I think, like 2,400 each. Um, this happened when Oracle had their 300 billion over, or what was it, 300, 500 billion, whatever, I don't even care anymore. Cash injection overnight. So basically those 2,400 dollar calls opened up being like less than $70. So, um, you don't have to spend a lot to make a lot of money, but you can spend a lot and lose a lot very easily. Yeah, I know you remember that. I was super, super upset about that one. You keep those puts open. It looks like a loss still, but again, if oil volatility starts heading down, let me pull that up. If oil volatility starts heading down, this is going to pull down super, super, you know, very, very quickly. Okay. I know the large thesis is that, oh, oil prices are going to be elevated all the way until 2027. I disagree with that. And the reason why is because from kind of like a global, you know, overall first world, third world country point of view, there's nothing good about elevated gas prices. It hurts the entire world other than the ones pulling the oil out of the ground and selling it. Okay. Um, and even then it's raising the prices on a lot of the stuff that they do as well. Um, Elevated oil prices leads to short-term inflation, which can turn into long-term inflation. Um, I have to go say hi to my daughter in a couple seconds here. Um, but when the conflict is starting to end, it's going to be in everyone's best interest. And I'm not talking about from a retail standpoint. I'm talking from like a banking standpoint, from a nation state standpoint, to actively short oil, okay, to manufacture the oil price downward. Okay. Um, we see this almost every single time there's a major uh, conflict of some sort. We see the oil prices rise. They might stay elevated for 1 to 2 months, and then from that point, they get absolutely just dropped. Oil is one of the fastest dropping commodities out there, so just keep that in mind. Now, our calls are being, not giving us the room to close. So what's very likely going to happen, which is, already happening, is we have this inverse cup here. Hold on, I want to draw this a little better. We have this inverse cup here, and from this inverse cup, we should be expecting a slight handle to the upside. Okay, so that will be where our exit is very likely coming. Um, Again, it will be at that 20 ma, but it won't be nearly as high. The downside today is absolutely massive though, so we're still trying to overall target the downside, not fully call the upside. This is just to take extra trades and then get some extra liquidity. Yeah, you're very welcome. And I know those positions can be a little difficult to look at, but this oil volatility has been very difficult um, because it's been really driven up on both sides. We have, unfortunately, and I'm not going to get into it too much, but we have, you know, people in high politics that have a lot to gain from um, driving these conflicts from, shaking the hornet's nest, from driving some of this volatility. So unfortunately, we are dealing with some of that. Now, I do think that overall, uh, that the United States and Iran really do want to try to come to a conclusion fairly soon. Fairly soon might mean another month, maybe month and a half, but that conclusion will be coming. Okay, because again, it's in everybody's best interest to absolutely drive these oil prices down. We could be seeing something basically called like an inverse gamma squeeze throughout oil because almost every single nation state's going to start shorting oil when this conflict is over. From Japan, South Korea, Canada, Australia, everywhere. Hold on one second, I have to say bye to my daughter. All right, I am back. Let's see what we got going on here. Let's check the 1 minute. I just want to hide this for a second, even though we are seeing the bullish structure. Bullish structure being right there. This is starting to form that handle on this micro cup. So again, I am looking for kind of that upward push into the downward push. And also there's this potential for a micro head and shoulders. So we should get our exit price. 5 minute time frame, that exit is going to be around the 7:33:47. I want to set it to 7:33:39 just to really lock in that profit. And once we get that contract sold, we'll go over everything else. But I just want to watch this for a moment while I drink my coffee and let that kick in. The target for the SPY today, um, that's really hard because you kind of already hit my target. Um, but that just means that the next liquidity gaps are opening up, which means that we have, I don't know why this horizontal ray deleted. I had that yesterday. The next target is going to be at this 728.50. Okay. It's extremely likely we hit that level today, just based off of the liquidity that's been forming throughout the pretty much entirety of the session. So it looks like we're getting our upside push here, so they should take our calls. Again, I have my conditional market order set to the 733.37. I just want them to take the calls and we will, reposition some form of puts at the top of that. So still just waiting for our exit. And we do see the VVIX still pulling up today, so it's at 96.66. Cursed number. Um, that means we're definitely going to drop today. And we should very likely see the VVIX pull up above that 98 range too. Which means that we do want to be able to get our exit here. Um, in fact, I'm going to go ahead and exit just because there's that right shoulder. So I'm going to take my exit right. I'm going to take it right here. Okay, exited my calls. Now I'm not going to enter puts just yet because again, this right shoulder can turn into an upside cup and we just have to watch that. Um, but if you want to try to absorb some more downside or cheap, I don't really suggest the SPY puts at this point. You can take the 729 puts, which let me check the price on those. Those should still be pretty cheap. Yeah, so the 729s are still very cheap. Um, those should most certainly hit today. If we're going to be getting that 728.50. Okay. So I like those. I also kind of like the 1 DTE 728 puts. They're a little more expensive. You can target the 726 1 DTE as well, which I actually think I want to do. um, because those are only 104 right now. I have no problem with doing that. And got it for 100. So even with this potential cup closing here, which looks extremely likely, we expect bearish structure at the top, pull a handle downward, and then head upward. Well, except I'm not expecting this to head upward. I'm expecting this to more so turn into a double top because we do have our VVIX just absurdly elevated right now. So, and those are the 726 calls for tomorrow. So go ahead and type that in chat. Or puts, I mean, excuse me. And then I want to look at the HIG because very likely HIG hit the bottom of that gap and is aiming to build a small handle to the upside. So I want to make sure. Yep, okay. That's exactly what happened. Um, HIG hit the bottom of that gap. It was at the 97.24 if I remember correctly. Yeah, 97.24. So hit the bottom of that gap, building a small handle. Okay, very likely the rest of the day is going to be HIG building this handle out. Um, we should get the rejection downward towards a little later in the day. So that's what we will be looking for. Now our VVIX, it's at 96.62. It was at 96.76, pulling down very lightly because of that upside move in SPY. Did hit the middle Bollinger. So I did exit a little early on that call, which I'm fine with. Um, seeing that right shoulder did just, kind of shake me out of that position a little early, but I was gonna sell it at the 733.31 regardless. So I'm completely okay with that. Now, with that said, um, I did enter those 726 puts for tomorrow at this range. Um, again, the middle Bollinger isn't the most ideal entry for puts because it absolutely can run against you. They can absolutely run this to the upper Bollinger on the 5-minute time frame, and that would, you know, absolutely burn those positions. But with the day being so bearish, with the HIG selling, with VVIX being just absurdly elevated today, I do think the conditions for shorting towards that 20 mile range are very, very ideal. So I want to look at QQQ here, see what's going on. QQQ did close this very important gap. So even on QQQ, we should be seeing a little bit of that upside reprieve to form a handle. But overall, I am still expecting the downside push today. So sorry I'm talking so slow right now. Trying to look at my phone while being half asleep and everything. But yeah, everybody should be having an absolutely great day so far. Yeah, thanks for joining. Appreciate you stopping by. Again, I will be streaming Thursday. Um, I will I don't stream on Wednesdays, so I will be back on Thursday. No, I'm not worried about NVIDIA right now. Um, my expectations for NVIDIA are for it to head basically below the $200 mark pretty soon here. Um, NVIDIA has a super large consolidation channel on the daily time frame, and we've been working on this very large head and shoulders quite a while. Um, I'm expecting this earnings guidance not to be so good because of kind of some of the deals out of China not going or, pretty much falling through, which means that if that's the case, then they very likely want back into this consolidation channel and want that downside liquidity. So I'm not too worried about Nvidia in terms of watching it at the current moment. Um, it has a ton of downside. So one thing we see on the SPY here is our ADL on the 5-minute time frame has been just trickling down the entire session. Again, the ADL is the cumulative distribution line, and that tells you basically the money volume. So that's telling us that a lot of money is leaving the SPY today. I wouldn't worry about the HIG and TLT right now. Again, both of those are going to be buying a little bit. We expect that level to be buying slightly. Um, but this isn't major buying. Okay, this is not major buying at all. Um, truthfully, I usually expect HIG to be above the, you know, 70 or the $80 range to really signify major buying. Um, right now, this is just forming a handle on this very bearish liquidity. Okay, and this is very strong inverse cup. From that inverse cup, we expect bull structure at the bottom, which we got. And from that, we expect a handle to the downside. So while there might be a slight reprieve here, um, the overall goal of the liquidity is to continue pushing downward. Okay, and that's overall what I'm seeing correlating with QQQ, SPY, all that good stuff. So I'm not really worried about that. Um, Same with the VVIX here. This is showing you that dealers absolutely have entered into insurance today. Okay. Um, Very likely we're going to see this pick up because that's usually what happens with the VVIX is you see it start really just taking a whole ton of weight very quickly. Because once the downside starts coming, dealers, obviously want to hedge. Yeah, and I'm not worried about TLT's buying here either. In fact, it's actually working to make a small head and shoulders here. If I was worried about TLT, I'd be expecting, you know, basically this large cup to fill. I'm not seeing that happen right now. The treasury yields should be up on the day. Yeah, the treasury yields are absolutely soaring right now. When oil prices are soaring, usually the treasury yields will be pulling upward, which means that um, TLT and HIG will be pushing downward. Now, I specifically don't track the EMAs, because the way that I think about moving averages is that with the standard moving averages, they're basically the great grandfather of every single indicator out there. Um, which also means that a lot of the algorithms and everything have been built on them. Um, the EMAs are a little more for very specific day trading, but that's not levels that I look for. Now, for the hourly and for the 20 mile on the hourly, we do see that within the hourly time frame or within the lower Bollinger, okay, which means that we can push all the way back up to the 736. Now, the reason why I don't think that's going to occur is because where is our 5 mile and 10 mile? Well, the 5 mile is currently at 740.36, which means that the lower bounds would be at the 738.36, and our 10 mile is at 738.23, which means that the lower bounds would be at that 736.23. Um, if the market is trying to have a rejection, which so far the moving averages are showing that, you can see the 5 mile curving, getting ready to start curving down below the 10 mile. Then the next level is to basically go straight to the 20 mile at this point. Um, so I'm not really worried about the market heading upward too much. They would have to go through a lot of levels to do so. And even within the hourly, we're seeing a really nice cross of the moving averages. So just going off of moving average theory, then what we would expect is the hourly 5 mile test. Okay, not the hourly 20 mile test because that should be tested basically once every 20 hours. Well, we tested that, slightly before open. So, do we need to test that currently? No, we don't. We don't need to test that basically until tomorrow. But from the lower low of the hourly 2 bottom Bollinger, that does bring us to the upward consolidation of the 5 mile. Okay. So that should be happening over the next 2 hours, that 5 mile consolidation. Now, from that 5 mile consolidation, we should be looking to push back into the lower Bollinger. Um, if not, then we can head up to the 20 mile, but the 20 mile will be pulling down pretty aggressively during that time. So that's with the hourly. Hourly is telling us that we definitely can push up to that 734 range. Now we do have, again, this up and handle. So this is kind of alluding to pushing up to that 734. And I also want to look at where the 5 minute upper Bollinger is at, because that might correlate with that.